Ladies and gentlemen, good evening. This is Christopher Aaron. It is the 15th of February, 2017, and we are going to update the action in the US dollar this week, as well as a good hard look at the gold market. We haven't really looked at gold for several weeks. There's a new pattern shaping up that I think is going to define the trading in gold for the next 12 months at least, and I'm going to present that here today. Now, last time that we had a video after my hiatus last week, we were looking at this pattern in the US dollar, and we were talking about this as being a multi-year consolidation that had formed in the dollar after a rise from 2008 and this breakout that had happened. And we were talking about the weakness that we had started to see here in the dollar coming back to the breakout level around 100 or 99.5 if you want to be a bit more precise. And so the dollar made the second continuation move higher here and came right back to that breakout level again. Now, when you're looking at a multi-year consolidation like this and a breakout to a new all-time high, and when you see the second move off of the breakout fail to make a new higher high, in other words, this retest came right back down to 99.5 here. This is telling you something. The dollar is looking weak here, ladies and gentlemen, and I don't see a whole lot of people paying attention to this in the mainstream news. Now, my thoughts about this are that the thesis that a lot of people picked up on in 2008, 2009, 2010, 2011 about the dollar being weak, about the Fed printing all this extra money to bail out banks and to fight unsustainable wars and all this stuff that's going on in the world that has required the central bank to debase the currency continuously. My thesis is that that is about to start coming home to roost. It's just that it's happening about 5 to 7 years after most people expected it to happen in the later part of last decade or 2010, 2011. Now, it looks to me like if this is a pattern that is presenting as a false breakout, basically a 2 or 3 month nominal new high that then fails to advance higher, the idea that I have right now is that we are forming a head and shoulders top in the dollar right now. This looks like the most realistic possibility at this point based on this retest not making a new higher low above the first retest of the breakout. So that is our warning signal here. Let's see how this plays out. And if this doesn't play out, now no pattern that is shaping up is 100%, of course. If this doesn't shape up and the dollar keeps grinding higher, there's still weakness here. This dollar is acting a lot weaker than it should based on the length of the consolidation and the move that should occur after that. So if you see something like this head and shoulders pattern negated, which happens about 1/3 of the time, I think what you'll be looking at instead is more of a grinding kind of move higher. It really looks like the impulsive expectation of a real strong dollar here is not playing out. So one way or another, I think that what is happening here in the precious metals market is that the price of gold is sniffing out, essentially. It is sniffing out that there is weakness either to come in the dollar imminently, i.e. over the next 1 or 2 weeks, or maybe toward the later part of this year at the very latest. And I think that is what the relative strength that we're seeing here in the gold market is telling us. So we could see now gold's coming back down, basically retesting that 1215 to 1220 level that held as resistance for several weeks back in mid-January and then finally broke out. This looks very nice. This was basically a short-term reversal pattern and then moving higher and then starting to move higher here in the overnight hours as we head into Sydney and Hong Kong. So let's see how this plays out. This may be the gold market telling us that the dollar is topping out here and now. Looking at silver over the very short run, a very nice reversal pattern here again today, sort of a spike lower, flushing out some people that had stops in here at 1780 before continuing higher. Silver a little bit weaker than gold today, However, silver had been stronger than gold over the better part of the last few weeks. We will look at silver in some more depth a little bit later on another week. We're going to focus mostly on gold this week because the technical pattern here, the picture that we're looking at, is really starting to shape up in my mind. This is becoming even more clear what is happening here in gold with a high probability. Now, if you're just looking at gold, if you're someone who is, for example, a stock trader, primarily focused on the S&P 500, like most of Americans and most people around the world are focused on the large, broad indices, not paying attention to gold. And if you were to look at the chart of gold over the last several years, this is what you would see. It looks like a whole bunch of nonsense, a whole bunch of squiggly lines, basically just consolidating, nothing really here to see. However, if you study this market day in and day out, as I have been doing for at least the last decade, and you start to notice paying attention to some of the swing highs, some of the patterns that shape up as far as Fibonacci levels, trend levels that occur, you start to get a bit of a different picture here of what's actually happening in gold. And the big point that I want to draw your attention to is, this is in retrospect now. We were looking at this down channel that had formed during the later part of the 2011 to 2017 decline that is still ongoing from a technical basis. We cannot call this broken yet until it actually proves to do so. However, the channel that had formed here for the last 3 years of that decline, which was broken decisively here in February 1 year ago, we saw a new high form in the price of gold above a very important swing high right at 1300, which was formed in the early part of 2015. So when you have just a series of lower highs, a very clear series of lower highs, and then boom, something happening here that shows us that there is some pent-up demand in the gold market. Now granted, this new higher high did not hold, but here's the point. It doesn't have to hold the first time a new higher high is made for us to be observing that something is changing here in the market. We're not saying that the price of gold is higher than it was 3 years ago. It is not. It is still lower. What we're looking at the sum of the evidence here and saying something is changing about A, the rate of decline, and B, something is changing about the trend here. And if you had a declining pattern in gold shaping up for the last 5 years, and if something is changing, it's telling me that there is perhaps a new pattern setting up here. So what happens after a declining market tends to be a basing market. We've seen this for the last 4 years. This basing process could go on for another 12, 18 months. And I believe then we will be looking at something like a changing trend, perhaps late 2017 into the middle part of 2018. Now, if you disagree with what I'm saying here, that's great. I welcome as much criticism, constructive criticism, I would hope. I try to present the best analysis that I am capable of. If you disagree, I would love to hear some other analysis on what you believe is happening here in the gold market. This is the system that has worked for me to get the odds in my favor. It has helped me to time some trades here in the options market at some of the relative highs. It has helped me to identify this low that was forming here in 2015. It is not perfect. No system is. So I would love to hear if anyone has any ideas on what is happening here in the gold market that negates, for example, a portion of the analysis that I'm presenting here. This is what makes the most sense to me. Now, something that I want to draw your attention to here that is very different. Pay attention to this 1200 level here. What we're talking about here is this level that held as resistance through most of 2015, right here again in late 2015, and then was broken here. And then this 1200 level acted as support. You can see that right here in February, again in April, again in June, right before the Brexit vote. This held as support. So gold traders, gold investors were paying a whole lot of attention to this 1200 level for about a year and a half, and actually even further if you go back and look at some of these swing lows right here, for example, in late 2013. So several years where 1200 was being paid a lot of attention to. And then what happened here, we had this slicing down through the 1200 level. And if you notice what's happened over the last couple of weeks, you had basically a 2-week pause around the 1200 level where gold hesitated a little bit around 1215, backed off to 1180, and has now moved higher again. So what has happened is the 1200 level is not being respected as it was. When you have a level like this that's holding for about a year and a half on a very strict technical basis, and then it's basically disregarded except for about a week and a half of trading action, it's telling you something. What is it telling you? It's saying that this market is changing. It's changing internally. So the participants that were here buying and selling at 1200 and regarding this as a very important technical level are no longer participating in this market. They're no longer paying as much attention to that 1200 level. So what does that tell us now? Gold is kind of floating in no man's land. If you see where it is floating, it's between this, what we're calling here a new tentative rising trend from the lows from this most recent swing low, corresponding, mind you, to the broken channel here that had formed for the last 3 years. We're looking at this data point as being fairly significant now. Gold is consolidating between this level and the long-term 6+ year downtrend that is still forming. Now, when you take this as a whole, what does this look like? Well, you're seeing the beginning of what you would have to call a triangle consolidation here, forming in the price of gold after an important break of a downtrend. And I have a colleague of mine whose work I respect greatly, who I have followed for some time, who I'm going to try to have on the show within the next couple of weeks, who is really an expert at these types of patterns, these triangle patterns. Basically what you're looking at is a low and a high, and then a higher low, and what I expect is going to be a lower high forming here in the price of gold, something like this, resulting in a break one way or another. My sense of it is that these breaks, when you're talking about a change of a trend here in gold, that these breaks of a triangle consolidation pattern are going to result in a change of the trend. In this case would be a surge higher, finally above this extremely powerful long-term downtrend that's been forming. So I'm going to attempt to have this individual on the show to have a discussion about the ramifications of this pattern, whether or not he sees the same thing shaping up here. This is someone else who also focuses mostly on the technicals, who understands the fundamentals as I do, but who says when push comes to shove, what matters most is what is actually happening in the market here, not what do we wish is going to happen. So that is my fundamental backdrop. I'm going to try to have that at some point over the next couple of weeks, and I'll just announce it on the video when I upload that show. So here's how things look like they're shaping up in the gold market. I think it's going to be a fairly exciting time, although this could get quite volatile here over the next 3 to 6 months and really scare out a lot of people before the big move comes that I'm expecting toward the later part of this year. I do thank you for watching. I know this has been a bit of an intense video. When you start to see new patterns shaping up, especially in the gold market, especially in the 5,000-year international store of wealth that is moving in opposite to the world's reserve currency, that's a fairly exciting thing to start to key into. And I think a lot of people will begin to pay attention to this market for the first time in the later part of the year, or perhaps early 2018. I think it's still very early in the grand scheme of things as far as that is concerned. We are going to be making some aggressive trades to try to play the breakout of that pattern as I see it occurring toward the later part of next year. I do recommend that if you are considering investing in this sector, that you think about doing that before that pattern resolves itself. Does this mean to mortgage the house and put 100% of your assets into leveraged call options on the price of gold? Well, I can't tell you not to do that. That would be absolutely a very gutsy move. But I can tell you that that is not what I recommend. I don't think you should take any single form of analysis and place 100% of your trust in that form of analysis. You should take as many different forms as make sense to you and form a best assessment based on that. This is what really works for me. And for those people who find that this is valuable, I produce a weekly report that comes out covering all of the markets, not just gold, but silver, the GDX, the miners, the individual miners that I myself am invested in here, as well as the exact buy and sell signals that I'm using for that. For people that have an independent situation going on with the precious metals, a lot of people are looking at this market for the first time or are trading some of these highly leveraged ETFs and have positions in these ETFs, and they start to go in the opposite direction that they were expecting. I really am trying to help people to construct some portfolios that are going to weather the storm if there's volatility, and at the same time allow them to capture a good amount of the upside that I think is coming over the next year or so. So that is what I do offer for anyone who's interested. I thank you very much for watching. I will try to be back this time next week.